All right, good morning, traders. Sorry I'm running a bit late this morning. Had some tech issues that I will get into in just a second here, but I just briefly wanted to take a second to talk about what happened with the overnight market last night. So obviously our market during the day yesterday, we did some rotating and then pushed higher in the second part of the day, and then spent the rest of the day rotating higher. For the afternoon up at these higher prices around the 43.40 level. And then we got a spike up at the end of the day in the M period. So that means spike rules were in play this morning. Spike rules basically tell us if the market opens above the spike, that is extremely bullish, and that is what happened today. However, the market is opening with a gap. So there's a gap below us, which means gap rules are in play. And the overnight inventory is pretty much net long. So that means that we should need some kind of counter auction to the overnight inventory, meaning the market needs to pull back a little bit here. And the first thing to watch on that pullback is the potential gap fill, right? Do they pull the market back down to yesterday's high? Let me just switch to the daily candles here, so that we can see where that is. So do they pull back down to 43.57, or do they keep the gap there? Actually, let me switch to the SPX to make this even easier to see. Bada bam. Okay. So the top of the, or the bottom of the gap, which would be the fill, is 43.64. Okay. And so that's the first thing we're watching this morning. With the market pushing higher in the overnight, we're looking for a counter auction to the downside. And then the question is, does that fill the gap? If it fails to fill the gap and it turns around and starts pushing higher, that is extremely bullish, as that is what's called a gap and go scenario. Also, if the market doesn't pull back at all here in the opening, if it just continues to trade higher, that is also a gap and go, which is the most bullish scenario. Okay, so that's the first thing to keep an eye on, is the gaps. So you're probably wondering, why do I have a regular candlestick chart up here? Well, to my shock, my data is not working today. Those of you that have been following the drama in the LBC, I just this month, just 7 days ago, switched to a new data service, which is the most expensive one for my market profile software, because the other one kept having these glitches. And then lo and behold, I get on, 10 minutes ago to start my my analysis, and I find that there's a glitch today in the more expensive data in the IQ feed. So I don't really know what to do. I've tried reaching out to their support. I haven't heard back. So I'm going to keep streaming here this morning and just have the candlestick chart up here, although there's not a lot of insights that I can give from it. I certainly won't be jumping into any trades because I'm not as comfortable without the market profile. But I'm just going to try to make it work and give you the best advice I can. Obviously, the market internals are opening bullish because we had inventory 100% net long. Still looking for a counter auction on that overnight inventory. Okay, so far it looks like a gap and go, which is the most bullish scenario. All right. Well, good morning, Chris. Good to see you. Welcome. Good morning, Mangala. Good to see you as well. Good morning, RK Leon. Good to see you. Good morning, RK. Good to see you. I love it, RK. You will smash that like button. You will feel yourself drawn to smashing that like button. Your day will not be complete without smashing that like button. It worked on Philip. Good to see you. Good morning. RK, we should do a donation match sometime. Yeah, probably not today. Not the day my data is down and I can't show the market profile. Let's pick another time. Miles, good morning to you. Speedboat, welcome back. Good to see you. Trading Donkey, good morning to you. Vincent, good morning. Bryce is back with us. Jitten, good morning to you. RK, looking for your next swing entry? I would agree. Today will be a day to get into a long trade. Because of the balancing area. Let's just zoom out for a second at the daily and remind ourselves about that balancing area. That does not look very straight. Bam, bam, bam. Okay. So we had this balancing area that we got stuck in for the last 4 days. Right here. And so, we went down and we touched the lower end the day before yesterday. And then yesterday we turned around and pushed our way all the way back up to the opposite end of balance. So the question that was on our minds last night was, are we going to get a breakout of this balancing area, or are we going to fail? Are we going to look above, fail and pull back in, and then rotate back down to the opposite end of balance? Well, the fact that we gapped up so strongly this morning and the gap is holding thus far is proof that this is a breakout. Okay, that even if the market pulls back down to fill that gap, they're likely to find support here, looking for continuation higher. So that is extremely bullish, and we do expect a large push out of balance. Balance leads to excess. So if we spend 4 days bouncing around in here, the breakout should last a couple of days to the upside. So all the signals this morning are extremely bullish. And the fact that we're not back filling the gap makes it a gap and go, which just adds even more bullishness on top of it. So we're only 12 minutes into the day. Obviously, anything can happen here. But so far, things look good to me for continuation to the upside. Nicholas, good morning to you. Trading Donkey, RK, I got my eye on 60, top of balancing area. If we find support there, it would be a great long entry. If we fail, the target becomes 42.70. Yeah, perfect. Yesterday's high. If it acts as support, look for continuation higher. If it fails, look for a trade down to the opposite end of balance. A perfect understanding of the balance rules, Donkey. Noto Cactus Heart, good morning to you. J Trader, good to see you. Welcome. Bryce, why don't I use my Thinkorswim stuff? I am. I'm using the market internals. Jonathan, go with 30-minute candles, and it's very similar. No, it's not. It's not the same thing. I told you, just switching from 2-tick increments to 1-tick increments totally messed up my mind. It's about pattern recognition. I'm used to looking at the profile, the way it looks, the way it's shaped, the colors, the tempo that it moves. All of those things are what I don't have when I don't have that profile. So essentially, that's what gives me an edge. That's what gives me, a slight advantage over other people is my pattern recognition with that market profile software. So it's not the same here on the regular old candlesticks, but that's all right. So this is probably as close as I can get to it. The yellow line being the point of control, the green line being the bottom of the value area, the red line the top of the value area. And of course, the candlesticks over here to the left is the volume profile. So that's about as close as I can get here with the regular candlesticks. Alexander, you changed your name so that it's a name I can read. My friend from Belarus. Good to have you. Chick 230, good morning to you. Marco calling for a gap and go. So far, it is. So, Charles, what would make it not a gap and go? What would change your mind on that? Well, the first thing to look for is, do we push back below the opening price? Okay. If we do that, then we're trying to backfill the gap. We're trying to work our way down to the high from yesterday. If it stops anywhere in between there, if it finds support and it turns around and starts heading back up, that is still a gap and go. If it comes back down to yesterday's high, finds support there, it is still a gap and go. It is only if it looks above yesterday's range and then comes back down and starts trading down in yesterday's range that it is a failure. Okay, it's what we call look above and fail of the previous day's range, which is very bearish for continuation to the downside because that is also the balancing area high as well. So pretty much anywhere above yesterday's high that the market finds support this morning is extremely bullish. Pew, 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 bullish. Rocky XL, good morning to you. River Rock, good morning to you. Like a rock. All my followers are hard. Like a... Wait a minute. Rainier, good morning to you. Design Knob Gluten. David, I'm happy to share my screen if your data is down. Is there a way to do that? Unfortunately, I'm not set up to do that. You can share it in the Discord with members of the Brigade. Pugpack sharing his. Bam, bam. Thank you, Pugpack. See, but even looking at his, it's so confusing to me because it's the layout so much different than mine. I have the numbers for the volume over here next to the volume candlesticks. And he's got like it looks like 3 separate profiles all combined together here. So it just visually looks very different. All right, gap and go is happening. The market is pushing higher here. All right, they're pushing. The FOMO is setting in. They're starting to see those targets on the higher term time frames. And they're thinking we can get up there. We can test this trend line. Probably up around 44.20s. Man, of all the days for my data to be down. Internals looking good. So far, the advancers versus decliners are pegged up here at higher prices. So that is bullish to see. And the ticks are staying above the zero line, which is bullish to see. All right, well, that was a journey, but I finally got it taken care of. I realize I've missed a ton of questions in the chat here, so my apologies for that. Thank you for the 92 people who stuck it out, even though I wasn't showing any profile or talking about anything. Thank you, guys. Okay, so as we already discussed, we have a giant gap that we left behind from yesterday. We made no attempt at all to fill that gap. So that was the first bullish signal. Okay, market pushed up above the overnight high, brought in volume, built support in there. Next bullish signal. Then the market started one time framing higher, which is the next bullish signal. So as of now, all of this still looks really good for continuation to the upside. Internals looking good. The ticks are kind of starting to trend down, but we don't really sweat it until they get below that zero line. So all in all, it looks like we've got a trend day. We got targets above us, lots and lots of targets above us for potential support and resistance. The first one being the top of the gap. So this was the old gap fill that we had left behind from a while ago. And that's going to be at 44.25. So once that gap is filled, we might find some resistance there and pull back a little bit. So we'll just keep an eye on the one-time framing. Do we continue to one-time frame higher? If so, the next target to the upside becomes the weak references around 44.44 in need of repair, and then the poor high at 44.54. But of course, we don't forget about that daily. It has that trend line as well, which will work as resistance. And that one's looking like it'll be at about 44.28-ish. So we still got that daily resistance right there we got to get through as well. Man, the most disappointing thing for me right now is I would have been in this long trade. This morning, right when I opened my charts and saw what the overnight did, I was looking for a gap and go. I was looking for continuation. I would have been in this with size. And now they're going to force me to wait for a pullback. Those sons of bitches. But that's all right. There's always another train coming. Always another trade on the way. No pullback? Well, it doesn't have to be a big pullback. But yeah, keep in mind as the advancers versus decliners, if they stay pegged up here at these higher prices, that is a buy every dip situation because those dips will keep getting bought right away. All right, we got 119 watching. We got 60 likes. Can we get it in the next 8 minutes? Can we get it above 75? I'll stay for the rest of the day if we can get the likes above 75 before the clock strikes 10:30 a.m. Bam, there it is, 75 likes. Thank you, guys. Giving me the warm and fuzzies. Appreciate you. So is there resistance at 27? Yeah, I pointed out that daily, that trend line down, which would come into play around there. And then also we're, getting above the base of this gap, the top of this gap right here, would bring us back into a previous balancing area. So there's likely to be some resistance up in here as well. But the main thing to watch at this point is the trend. Does the market continue? Does each 30-minute period continue to push higher? If it does, the price will follow. It will keep going higher and higher. But yeah, there's a lot of resistance in here to work through once we repair that gap. The flea hit the like button before it was fashionable. Always ahead of the curve, the flea. That's why you make money, baby. J Trader, get in on a pullback to 413. Yeah, I mean, I don't know that you get to 413. Probably find support around 414. But yeah. Especially with the C period printing in 5 minutes. You can put your target just a couple ticks below the B period low for your stop. So you can enter anywhere in here where you can accept this amount of risk. So anywhere you can accept this amount of risk for this amount of reward. Where's your entry in there? Do you have to wait for it to get back down to here? Or can you get in here? Can you get in here? Do you need to wait for it to get all the way down to here? That's the question that each trader has to ask themselves. Donkey, take down the banner. Well, what do you want me to put there? Do you want me to put feeling bearish? I don't think that's going to help your kids. River Rock, do I think they can get to the POC? Oh, yeah, for sure. The B period low. No doubt about it. The question is, can they get there right now? Right? Because if they wait for 3 more minutes when the C period prints, well, then they're risking the cessation of one time framing here. which would send us a very different signal. Instead of that being a dip you buy, you make the assumption that this was the high for the moment, and you look to buy below there, down in here. So what's the main focus for the market right now, more so than how much of a pullback will it have, is will it continue to trend higher? So far, it's got all the givings of a market that can trend for hours and hours. Yeah, but Donkey, we agreed we would keep that market trending higher banner tucked away until the C period, because of how many times we've been faked out by the B period. River Rock, I hate one-way markets. Just jump on the train. Go the same direction as the one way and you'll learn to love them. Okay, so the C period printing is leaving behind some single prints in need of backfill here. I do feel like they will get backfilled, but again, I'm looking for support to step in above that B period low. Donkey feels like one of those days where it's little nodes separated by singles all the way up. It could be. The only reason I think these ones are going to backfill is because the tempo slowed so much up in here. So this first push was a lot of FOMO. We like to backfill FOMO, let the stronger hands buyers, give them a chance to step in. River Rock still watching that 44.13 for an entry. Like I said, you know where to put your stop. 2 ticks below that B period low. If they give me a chance, yeah, I mean, like I said, they should. But the only thing about the pegged advancers versus decliners is a lot of times the dips are very quick. It dips and then it just takes off again. It gives you very little chance to get in. It's much easier to stay in once you've entered your position long. but it can be difficult to get in if you're not yet. Okay, NQ looks exactly the same as the ES. Gap and go, one time framing higher, single prints left behind in the B period. And they have a target of a gap above. Theirs is much further than ours, but they do have that target as well. So yeah, both indices moving together here today. I'm not sure what a crash up is, but a bullish trend, sure. I don't think it's going to be like a rocket ship, though. I think that was what we got in the overnight and the first couple periods this morning. That was rocket ship mode. That was FOMO short covering mode. Now it's going to be a grind higher. No, I get the opposite of a crash down, but it doesn't work like that. Elevator down, stairs up. It doesn't instantly push back up. Made loads. J Trader, yeah, the likes are a big deal when I'm publicly live streaming. Most of the people who come here to watch the channel, because I don't do any like advertising, I'm not like the type of person who's going into other people's chat rooms and promoting my stuff. The only way I really get new people to the channel is YouTube, suggesting my videos to them. And the number one thing it uses to decide whether to suggest your videos to new people is when it sends you somebody new, do they push the like button? So, you know, somebody clicks on one of my videos for the very first time. If within, 2 or 3 minutes of watching it, they click that like button, it just tells YouTube it should send more people my way. So it makes a huge difference. pushing that like button on the regular YouTube. I mean, I don't know if I'd go as far as to call them despicable trash, but just, it's not my way of doing it. But if it works for them, who cares? Found my channel through Facebook. Well, that's interesting. One of you guys must have shared me. Thank you. And welcome, Nup204. Happy to have you. Yeah, I'll stay till 4 p.m. Rainier, thank you, brother, for sharing me. I appreciate you. Craigslist, John. I got to remember to take down that ad. All right, so we're back filling these single prints left behind in the B period. Here's a dip. If you've been waiting, this is a dip. And you know where to put your stop. 2 ticks below that B period low. If it gets to there, it's likely to continue down further. But if it finds support anywhere in here, that is bullish for continuation of the trend higher. Ticks broke the zero line. Ooh. There you go. Well, the ticks are starting to trend down a little bit. They broke the zero line, but they didn't stay down there. So that's not really bearish. But this is interesting that the advancers versus decliners are starting to push lower. So to have that day where the market just pushes all day long higher with price, normally this gets pegged. It stays right in this zone. So if that continues lower, that is a sign that we are not going to get that kind of trending day. But for now, it's holding on up. They bought that first dip. Rocket trailing stops hit. I assume that was on long positions. Congrats. Erman, damn it, I FOMO'd. What'd you FOMO? Yeah, Erman, if you bought the high, you're okay. As long as the market keeps trending, right? As long as we don't get that cessation of one time framing, the odds still favor the market working their way up there and making new highs. Remember, we have a gap to fill above us. That's a high probability target. You've got the momentum of the day on your side. So as long as the market continues to trend higher, we should make new highs here today. Ocean Blue, I like the other chart. It's simpler for me to understand. You mean the one I had up this morning? Just the regular 5-minute candles? You can look at that every day, bro. So this is a great example of where I feel like market profile has an edge over regular candlesticks. Because if you look at these, it looks like the market's rolling over, right? Makes you feel like that's the top. But if you look at the market profile and you see the one time framing, right, you can see that the market is just working its way higher with each 30-minute period. You could look at that and go, oh, well, this is just the pullback to buy for the next big push higher. Right? So it just gives you a slightly different perspective. Looking at the market in 3 dimensions. D3, baby. 3D. Not Mighty Ducks 3. 3D. Yeah, but Jonathan, it's a 30-minute candle with letters instead of a candle. So that's a huge difference. I'm just kidding, obviously, being facetious. Aaron, it's called a market profile chart. Nathan is short 44.16. Like I said, would not fall in love with that short. As the market is trending higher, you're fighting the trend. So you do still have some single prints to backfill here. But I'd be keeping my finger close on the take profit button once we get there. The TPO chart is on Window Trader. Window spelled without a W at the end. Well, Jonathan, that's part of what I like about it, though, is the ABC fashion of it. It simplifies looking at the information for me. So I know exactly where the day started and everything else. Very minor, little things. But I do think they have an effect. Arthur, so are we not rolling over? No, that is not what I believe is happening here. If we do, we'll see it in the ticks. The ticks will start trading below the 0 line, and then we'll see it in the advancers versus decliners. You'll start getting a big red candle pushing down here. But as long as these ticks are staying above the 0 line and this advancers versus decliners is staying pegged up here around this higher price, that is a sign that this is just buyers stepping in. Slowly but surely, they're just building their position in here because they think the market's got much higher to go. So to see it roll over, I'll need to see the C period get below the B period and those other internals roll over as well. That's fair, Design Knob. I too am losing faith in the trend day as time continues, right? A big part of a trend is momentum, is the excitement, the thrill in the traders. So if they can't get a push here soon, that thrill is going to run out. That excitement is going to run out. So they do need to get that C period above that B period high here. And get the excitement going, get the juices flowing, get the participants desperate to buy again. Dinesh, why does the base act like support? Can you explain the psychology behind it? I can do my best, and it's kind of different depending on different scenarios. But basically, when you create single prints, what that often means is there's been a change in the market, right? So again, this morning's isn't a great example, but like, let's pretend this had been a high that we'd been poking and poking at, trying to get through it, and we just couldn't. And then out of nowhere, we finally break through, boom, and we push higher. We often leave those single prints behind because so many of the traders who were shorting right here get squeezed out of their shorts. So that gives the market a big push higher. And then if the new buyers start to step in at those higher prices, well, then the single prints get left behind. So what that's showing us is that's where something changed in the market. That change being these shorts here getting squeezed out. And so oftentimes resistance becomes support. So when the market comes back down to there, people buy at that level. There's also the added nuance here today in this specific moment of the one-time framing, right? There's something about the psychology of time in the way that it works that if you can keep a 30-minute period above the previous 30 minutes, it just gets people more excited. I can't explain why that is, but if you keep the C period above the B, it just makes more people want to buy into the D period. And if you keep the D above the C, it just makes more people want to buy. The more time they watch the market going higher, the more confident they become that it will continue to go higher. So that kind of adds an extra reason for buyers to step in here to defend this trend that we currently have. But Donkey brings up a great point of the D period printing in 7 minutes. They really need to get a push out of this C period if they want to keep the momentum going. You can do it. T2, typically do you prefer to scalp or swing or build positions over time? I would say, like, I call myself like a day trader. I'd say most trades I sit in for like 20 minutes or more. I take scalps when there's a lot of volatility in the market, when it's like grinding up and down very, very quickly in a particular range. But otherwise, I'm usually entering a position that I'm sitting in for a while, but never more than a day. Trading Donkey, we're up 70 points from yesterday's close. Is that not excitement? That's my point. That excitement got us here. Now we need new excitement to keep it going. Got to bring in more buyers. Make them feel desperate. Oh, I got to get me those ES contracts. I'm never going to get a chance. Right now, they're like, oh, I can just chill. I don't have to jump in. I can wait. Could I Russian accent, please? Could I Russian accent, please? These buyers need to break out the price above the B period, or they're gonna lose the momentum they work so hard for. Donkey shorting. Fighting that one time frame, my friend. David V, isn't there a hesitation to jump in now? Again, it's always about what you're willing to risk. I still believe that the market is going to go higher from here. But I wouldn't jump in here because I wouldn't want to have to risk losing this much to get it. So for me, the jump in was down here. But if you're willing to lose that much to potentially make that much, well, then it's a trade you could look at. Just to me, the risk reward isn't there to go long up at these levels. But the good news is, if we're going to trend higher, we'll likely pull back down to them. We'll push back up again and then come back down into this support one more time so you could buy it there. Trading Donkey, market too high? Market's never too high. That last part sounded like Dracula of my Russian accent. Give me your blood. Fred, God, if we do an inside D period, sleep? Yeah. No, I don't think that's going to happen. If the D period prints and it starts to work its way down here, it'll get the cessation. It'll just be a sign that we ran out of momentum. We're seeing it in the ticks. They're starting to look like they're trending down here. All right, so printing a D period, we pulled the POC a little bit higher. So that's slightly bullish. And now we're looking, can we stay above the 44.1250 level, which is the cessation of one time framing. David, do I read the fact that they haven't filled that gap above as a sign of exhaustion? Not yet. I've told you guys what exhaustion will look like to me. It'll be the internals turning downward, the tick starting to trade below the zero line, and the advancers versus decliners getting a big red candle to the downside. That will be exhaustion to me. Otherwise, I just assume that these buyers are very slow, but that they are buying. It's also worth noting that we're getting a bit of like what you might call a cliff up here on the volume, where it's getting the fall off is very harsh. So from 10,000 contracts to 4,000. So that's one of those things where if the people who are selling in here are selling at that exact level, they're short-term traders. So what's going to happen if the market does get a pop? They're going to get squeezed. So all eyes right now remain on the one time framing. As long as that trend remains intact, we should get a continuation higher. Jonathan, you want to talk about the Q? Let's do it. Let's do it, do it, do it. Man, exactly the same as the ES. Barely holding up its one time framing here in the D period. Just as a matter of perspective, this I would be nervous to buy. For some reason, not the ES. This I'm still comfortable buying, but the NQ really looks like it needs to backfill those single prints. You got perfect taper up to the high. So this one feels more 50-50 for cessation or a push higher, whereas the ES still feels like it wants to push up. Wants to keep that trend going. All right, well, the more time that we spend grinding around here, the more we increase the odds. We need to backfill those single prints that we're just not bringing in the buyers we need here. And of course, doing that would cause the cessation of one time framing. So we'd be looking for a larger pullback to bring in more buyers if that were the case. But I'm still in the long trade, waiting for cessation to stop me out. But at this point, the more time we spend failing to break out above this 19 level, the more a need for a larger pullback is setting itself up. Charles, I don't understand what you're talking about. Explain that to me in more detail. Essentially, it's a game of buyers versus sellers. Are there more people that think the market's going to go up than down? The more time we spend grinding around in this area, the less and less buyers there are. They've already bought, and now they're waiting for the market to break out to prove them right. So they're not buying the dips anymore. They were buying every little dip they got, and then it dipped lower, and then it dipped lower. They tried again, dipped lower, dipped lower. So that's just, we're visually seeing the buyers losing confidence here in this market. And if it were still the C period, I'd be like, no worries. We'll come down, we'll backfill these single prints. That'll bring in more buyers, and we'll get continuation from there. But the fact that we've spent so much time here that we printed the D period, it means we'll get that cessation. And that is the sign that there aren't enough buyers up here. The market needs to pull back down to, for example, where the halfback is at 44.04 to bring in enough buyers for continuation. It's kind of sad. They had such a chance. Market, you had such a chance to take off to the upside today. And you're ruining it. You're just letting time take it away from you. Man, the anticipation is killing me here. I could really see this thing going either way. Looks like it's going to fall, but it could still bounce from here. Okay, so that's the cessation of one time framing. The market is rotational. So from here on out, I'll be looking to buy support below the POC. And the first potential support I see is the halfback right at 44.0325 into this node of volume just below it from earlier this morning. That's the first potential support that I see there. The next is going to be the overnight high at about 43.98. Okay, so for those of you that have been with the channel a while, you know how I trade rotation. When the market's above the point of control, I assume it's going to push back down to that level where those green letters are. So I'm looking for resistance above. I would treat this node right here at the D period high as a potential breakout zone. So I would be happy to sell any resistance in here for a short back to the POC. But if we're able to get above this node from this morning that we were talking about, right there at about 44.19, if we're able to get above that, I would not want to enter a short there unless it pulled back down below again, just in case that which was resistance becomes support. So it pushes above, comes back down, finds support. I'd want to go long for continuation to the upside. So I would go short below that level, or wait for it to push above and then see what happens and re-enter the short there. But otherwise, I assume the market is rotational. Which means selling above the POC and buying below. Alpha Trader, if the D period is still going, how can we call this cessation? It's cessation the moment it gets 2 ticks below the C period. So when it got, at the moment it got 2 ticks below, that's when cessation happened. Jitten, does anybody ever feel like the POC is in the wrong place? Yeah, I know what you're saying. I hear you. It feels like we spent way more time up here than we did down here. What's the deal? I don't know. That's an interesting question. Okay, so now that I'm looking at this node of volume just above us here as potential resistance, what do I want to see to verify that? Well, I want to see the market continuing to trend lower in the ticks, meaning more and more sellers are piling on as we push our way up into that volume. And I also want to see the advancers versus decliners have kind of a larger pullback here. This is still kind of pegged at higher prices. So this hasn't quite turned bearish yet. So yeah, if I don't see that, if this continues to stay pegged up here, if we keep bouncing off the zero line and finding support, then I might be thinking we're setting ourselves up to break out and continue higher. But if I'm getting those signals I just talked about, if I'm getting the trend down in the ticks, I'm seeing the trend down continue in the advancers versus decliners, well, then I'll assume it's resistance building in here, which is a shorting opportunity back to the POC. No, Cactus, did I not get it out in time? I thought I turned off the mic. Thank you. No, there's definitely echo in this room. I have no sound absorbing materials present. Justin, is the Nas giving us a clue? Do you mean is the Nasdaq giving us a clue? Just looks rotational. So again, with the Nasdaq, I would treat the high from the C period like the breakout. So if they get above there, can they stay above there? Can they find support and continue up? If not, if they look above and then they pull back in, they're likely to head back to that POC again. Well, hello, Erman's fiance. Yeah, it would be boring as fuck to watch somebody trade. But Charles, isn't that your whole thing? Aren't we all just here to watch you trade? Yeah. I just mean if you don't know what's going on. Me right now being like, ooh, we're above the POC and we're getting resistance. Are they going to break out to the upside? I don't know. They're starting to trend below below the zero line on the ticks. That's a sign the buyers are running out here. Nothing makes watching golf exciting. More play-by-play? All right. Well, we just brought in another 200 contracts at this 44.15 level. Whoop, there's another 7 and another 18 at the 44.16. Wow, this is a strange moment here in what's happening with the market, because we didn't quite get any bearish signals besides the cessation of one time framing. Other than that, I mean, the ticks are bouncing perfectly off the zero line, so that's a sign that buyers are stepping in here. Those advanced first decliners are staying pegged up at a higher price. They're not pulling back down. So now the sort of next potential thing is, can we break out above this node of volume right here? So can we get above that 1950 level and then come back down and find support? If so, this market might start trading higher once again. If this acts as resistance and we can't get above it, or we get above it and fail, pull right back down below, then the target becomes the POC. I have not been to a Texas auction. What's different? Does it move faster? J Trader says he needs 420. I'm sure if somebody knows a guy. All right, Jonathan, enjoy your sleeps. You're all of like 3 or 4 hours that you're going to let yourself get. Enjoy. J Trader, we're one like from 100. There's 123 people watching. Do any of you like me? All right. Well, it seems like the bulls bought that dip and they want to try to break it out. Seems very strange to me. Seems very strange that the D period low was weak. Meaning it's not stronger hands buyers who stepped in there, but the weaker hands short-term players. Oh man, yeah. Not only did I not get more likes, I lost a like. Somebody unliked. They were like, "What? He's about to get to 100? Fuck that guy." Unlike. Mr. Knife, thank you so much. Appreciate you. Kim, must be a lot of short covering today. Yeah, I mean, I would think that was more what took place in the A and B period. It would seem to me that this are just very slow, very small number of buyers stepping in, looking to break out to the upside. That's what it feels like. $102. We did it, guys. We did it. Laggards on the like button. Appreciate you. Yeah, the larger sell-off into November, I don't know. Today could be the day that proves that's not going to happen because of the previous balancing area. So remember, we had this 5-day balancing area in here. So the way the market chose to break out of this balance is giving us a signal of what it's likely to do over a longer term basis, right? If we spend this many days bouncing around in here, we should at least spend a few days trending in whichever direction we break out from this balance. And so this morning, it was proven that that breakout was to the upside. So unless we trade, which I definitely don't think is going to happen, but unless we were to trade all the way back down, absorb this entire gap from yesterday or from this morning, and then continue into yesterday's range further down, only that scenario could lead to further selling at this point. So finding support anywhere above yesterday's high, to me, increases the odds that we have continuation to the upside from here. And that's just the breakout of the previous balance. Balance leads to excess. So far, it's leading to the upside. Okay, so they failed to break out. The next target is the POC to the downside. Rainier, do I look at the VWAP at all? No, I do not. What you're seeing here on the screen is all that I'm looking at. Okay, so remember what I mentioned earlier about the cliff right here of volume at 44.1950. If they push above that, they'll start to squeeze out some of these shorts that have been getting in here. They're doing it again in the E period right on that exact level. So that should give us a little pop to the upside. But the real information will come from after it gets the pop. Does it pull back down below this level? Or does it pop above and then come back in and find support in here? Finding support could lead to continuation higher. Pulling back down below this node would lead to a rotation to the POC. Okay, POC pulling higher, slightly bullish. Obviously taking away a target to the downside for a short here. Okay, well, there was the push above this node, which went nowhere. Literally went nowhere. Basically made the first possible weak reference it could make and then pulled back down. So now we're testing this node to see, does this act as support? Okay. Again, could still go either way with it sitting right on that zero line. But if the tick starts to trend below that zero line, you're looking at the market pulling back down here towards this week D period low. My pleasure, Ocean Blue. Happy to have you. Well, the more time that we spend up here, the more I'm starting to feel like the market needs a pullback, a legit one. This pullback in the D period that gave us the cessation of one time framing, it literally found support at a weak reference. So to me now, it's like this market either needs to break out and start pushing higher, or it needs a bigger rotation down. Perhaps even to the 20 moving average on the 15-minute candles. Or halfback right here at 44.04. Feels like it's needing a larger pullback to bring in the buyers here. This slow grind is giving me nothing. Ocean Blue, everyone should join my site, in your opinion? Well, thank you, brother. I hope they do. Link in the description. Fred, these are damn slow buyers, but breadth is pegged up and volume breadth is like already higher than Tuesday. Feels like this will break out later in the afternoon. Yeah, I mean, the point I'm trying to make is that I feel like that's what it wants to do. That's what it's trying to do. It's trying to push up and fill this gap left behind from the 27th. That is what it's trying to do today, but it's not doing a very good job of it. Every time it pushes up, it does it on a weak reference. Every time it pulls down, it does it on a weak reference. So it's not bigger players that are taking their bets here. And so then I ask myself, all right, if this is just short-term traders picking each other's pockets, what is it going to take to get those bigger players to step in order to get that push higher that we want? And I think that's the larger pullback. The very least to repair this weak D period low at 44.09, but if not, to come down and meet up with the 20 moving average or the halfback. Somewhere down in here should bring in stronger hands buyers that will hold through the breakout. But right now, shit's weak. J Trader, that's actually a great way of framing it. Join for the low cost of 2 MES handles. Less than a tick on the ES. Abdu, Nasdaq, would you like to look at the Nasdaq? Is that what you're asking? Let's take a look. Ooh, man. Rotational in a very tight range. Their attempt to break out just now caused another poor high. So literally exactly the same as the ES. It's weak hands buying and selling from weak hands. The larger players haven't stepped in here. Intraday. Now they did leave behind a poor high that's in need of repair. So that is a target to the upside. But same as the ES, I feel like they need a pull back down, maybe to their halfback at about 14,931 to bring in the stronger hands buyers. Average Joe, how can you tell if it's bigger players versus retail? Is it due to the low momentum? No, it has to do with the references, where the market is turning around. When you have a lot of weak references, particularly when it's like one after another after another. So look, right now, another weak F period low, right? Like just every push they do, the push ends on a weak reference. And that's just a sign that it's shorter term traders that are taking those trades. So it's short term traders that bought the F period low here because it lined up perfectly with the C period low. They're just looking at those candlesticks and they're trying to buy the lows. Same thing with the F period high. They just sold it right there because of the C period high. So that just gives me an indicator that it's shorter term traders. Yeah, as far as the AD still being pegged, yet no follow through, that doesn't have to happen instantaneously. This is a tricky moment, guys. The market is clearly trying to break out to higher prices. And it's like the next question is, okay, if that's what it's trying to do, how good of a job is it doing? It's like 50-50. It's like it's keeping the internals strong here. Strong enough that there could be enough buyers stepping in to push above, but yet with the tempo and the weak references, it just doesn't seem like it's doing a very strong job. So it's doing the bare minimum it needs to do to keep the internals bullish, but nothing more. So that's why in my mind what it needs is a pullback. Needs to give the stronger hands buyers a chance. Then the next push up should pass right through this resistance and continue higher. Cotton Dog, thank you for the heads up. I did not realize that. That is obviously a server issue. I will look into it. Thank you for the heads up. All right, guys. Well, I got to run and move my car here. So disappointed to have to walk away from this incredibly exciting market. But I'll be back in about 5-10 minutes. So just keep watching till then. Like I said, any dip that pulls back in here towards the halfback is buyable when it finds support. And any push above this weak F period high would need to find support above that level for a continuation higher. Otherwise, it will just rotate back down as well like it did here in the F period. Okay? So back in a few. Good luck to you guys. All right, guys, I'm back. Car is parked. Don't have to move it again till tomorrow. Exciting times. Kowal, can you please advise your view on SPX 500? I'm short on this at 44.25. Okay, so it looks like right now on the SPX it's at 44.23. So you bought in just a few bucks higher than you are. Okay. Hitting dingers. Yeah, he's talking about the SPX. That's why. Yeah, as far as what do I think is going to happen here, short at 25 is pretty tight, right? I would have preferred to get short up at the upper end of the range, which would have been closer to like 27, 28. And on rotational days, the way, because I'm just a very short-term trader, on rotational days, if I'm short above the POC, my profit to take, or my target to take profits is at that POC. I wouldn't hold on to that trade for very long. So yeah, at this point, I think the way I would manage it if I was in that trade, I'd have a good tight stop just above the high. And I'd be waiting for a pullback, but I wouldn't fall in love with it. As soon as the market gets a decent pullback below the POC, maybe to repair this weak D period low at 44.0950, or down here to the halfback at 44.04. At either of those levels, it can find support and then rotate right back up. So, yeah, I'd stay in it for now because the market is still rotational and you are above the POC. But once you get below that POC, I'd be ready to take profits because it doesn't have to go much further than that. And of course, have a stop in case the market does break out to the upside. Yeah, I mean, if you're looking to hold it for a week, you know, that's not a trade I'd be in right now. As I said, we broke out of rotation down here. So on a longer term basis, the momentum is to the upside. Kowal says he was having 3 good days, but then yesterday took back the profits. Yeah, that happens. Again, if you're a swing trader, I don't have a lot of great advice. The market just reversed. It was trending down, and then it found a low, and it turned around and started heading back up. That's what happens. But as a day trader, of course, the argument would be to protect those profits, right? Have a stop set so that if your position, if the market reverses on you, whatever signal would tell you that, you exit the trade there and keep the profits. But of course, it's easier said than done. Meanwhile, this super exciting market remains rotational in a very exciting range. The volatility will just melt your face off. Yeah, great point. Feels like Globlex. It really does. The only way to trade those overnights is to just like set a position and then walk away and come back an hour later. Because watching it is a lot of times is like watching this. It did this before the Great Bear Slaughter of 10-6. Yeah, it was in the I period yesterday that it broke out. Could be, Donkey. Could be. Like I said, for me, the thing that would be the most beautiful thing to happen here is just a quick liquidation. The market sells off very quickly down to maybe the 20 moving average on the 15-minute candles or down in here somewhere. And then it bounces. You buy this area. But then you only take partial profits at the POC looking for the breakout, monitoring the rest of the trade for higher. That's the trade that I'd love to get into here with pretty high confidence. But I'm also just as happy to get into it on the breakout. So if it doesn't pull back, if it just pushes higher, comes back down, finds support, I'm happy to go long in there as well. Nick, yes, the suspense builds. You know what I was just thinking to myself? Literally, I got to the market this morning because of my data problem this morning. I got to start trading right here. Just look at what the market's done since I got here. It's freaking gone nowhere. It just, yeah, so I feel like this might be my fault, guys. If I'd have been able to get in the trend with you this morning, it would have kept going. But I was just too late to the party, so the market went to sleep. But obviously, you know, it's in these moments where the market gets boring and the range gets super tight that we know it's like a coil that's just building up pressure. It's getting tighter and tighter, like a rubber band that's being pulled further and further apart. We're just building up momentum so that when we break, we can break hard. But I'm not going for the trade on the break. I'm going for the trade to respond to the break. So if it breaks to the downside, I'm not trying to short it. I'm trying to wait to see where it finds support to go long for the rotation back. And if it breaks to the upside, I'm not trying to go long with it from in here. I'm waiting to see, does it build support around the highs to go long with it there, or go short if it fails and starts to pull back in for a rotation back to the POC. Donkey's going to count it down to the minute, T minus 45 minutes to launch. No worries, Alexander. It happens. There's always one or three. All right, so as always, if the market is going to break out of a rotation, what do I look for to tell me that that could be about to happen? Well, the first thing I need to see is I need to see the price pushing up towards the upper end of the range, okay? Then I need to see the ticks trending higher and staying above the zero line. So right now, the tick one is already set in motion. We're set up to break out on the upside. Just pulled the POC a little bit higher. That's slightly bullish. So the next thing to look for is after price pushes above the high, does it pull back down and start to bring in some support there? Do we start to turn some of these candles around the high pink? If that's what happens, I'll go long for continuation to the upside. If that fails to happen, I'll go short for rotation back to the POC. Fred says if some big order showed up at 4,400 or 4,430, surely this would move the market. And I think that that's an interesting perspective. And also to ask the question of why isn't that happening? Why aren't the larger players showing up here? Well, we can tell. Sorry, I shouldn't say it like that. How do we know it's the shorter term players, the people with less money who are participating so far? And that's because of all these weak references, which we've literally had since this morning, since the D period. Every single push up has been a weak high, and every single push down a weak low. So just over and over again, it's been short-term traders just picking each other's pockets. They're both sides are just guessing that they're going to get continuation in one direction or another, which is why I keep saying what the market really needs is a quick liquidation so that we can find support. We can bring in those longer-term buyers. And 4,400 would be an area for them to step in for sure. But they don't have to go far now. We got the 20 moving average right here on the 15-minute candles. Both indices, that could act as support. They could also just repair the weak references. So get a few ticks below that D low and then rotate back up. But the same thing is true with the highs. They could push above the high of this F period and then fail and pull right back in. So there's nothing else for us to do but wait and be patient. More information will come soon. I period low is weak as well. Thank you for pointing that out. And I was really hoping today would be exciting. If I was going to be on the live stream all day, I wanted it to be a more interesting day, but it's turned out to be quite boring. Indeed. Patrick, yeah, that's a good observation on the non-farm jobs coming out tomorrow. I tend to think that's not as big a deal as most people make it. To me, what the bigger players are waiting for here, and I know I sound like a broken record because I've said it like 20 times today, but I think they're just waiting for a pullback. They don't buy at the high. Once they've gotten their signal that the market is done selling off, that we made a good low and we're ready to start continuing higher, today's trade should have given them that signal that they can trust going long in this market. So now they're just waiting for an entry. Right, so just think about it like that. If you woke up this morning and yesterday the market was down here, okay, would you be wanting to jump in all the way up here? Or would you be waiting for the market to pull back so you can buy somewhere that's cheaper? And so we're stuck with just us little short-term traders picking each other's pockets in the meantime. Salmon River would be plenty exciting if you were to short at the open. Yeah, I mean, or go long at the open. Then you could still be excited right now. You could still be in your trade. Like, is it going to break out? Sorry, guys, did I delete those too quick? You missed your chance. Webcams-chat.com. Help yourselves. Don't give them no credit card information, though. All right, next week reference repaired. So they've done cleaned up a bunch of those weak references. Now we're looking for support. Well, the G didn't disappear, Rainier. I just deleted it, right? To repair that weak G period low, the I period needs to get 2 ticks below it. So we repaired that weak G, so I went ahead and deleted it. Spamming based on Charles's internet history? No, I have no interest in webcam chats. Rainier, when I say a weak reference has been repaired, well, in a technical term, it just means the market went 2 ticks past it. So if the market gets 2 ticks below this weak D period low, that is repaired. If it gets 2 ticks above the weak I period high, that is repaired. And what does that mean? It means it's no longer affecting the market. So right now, this D period low is acting like a magnet. It's pulling the market towards it. But as soon as it gets 2 ticks past that level, the magnet disappears. It no longer matters. It's no longer affecting the market. It's repaired. Okay? Same thing now with these to the upside. We got 2 of them. So there's 2 little magnets pulling on the market this way. Okay? And if the market gets up 2 ticks above this one, it's gone. It no longer matters. 2 ticks above this one, it's gone. No longer matters. Okay? We got potential support right under the price here with the 20 moving averages on the 15-minute candles. If those do not hold, the next target is the halfback on both indices. So that is 44.04 on the ES and 14.931 on the NQ. Buyers still buying every dip. PTC Research is their voice to this. If you can't hear me, then this is a voiceless stream for you. Rainier, no, it's no interrogation. It's a fair question. So a weak reference is created when it's less than 2 ticks from a previous reference. So the F period high is only 1 tick from the C period high, so that makes it weak. The I period high is at the same level as the H period, so that makes it weak. And on the D period low, that is weak because it is 1 tick from the B period low. And also the I period low is weak once again because it's 1 tick from the B period. So that just tells us it's still short-term traders doing business here. They're stepping in and they're buying every dip, but they're the only ones. It's not bigger players. It's just the short-term retail traders. We got your back. PTC, good to see you. PTC research. So what is the deal with this donkey character on here? Is he like the clown in the class? I don't think any description of donkey has ever been more apropos. Donkey's the class clown. He's the one that keeps the rest of us entertained while we deal with this boring shit. Yeah, well, that's just like your opinion, man. No, RK as well. But RK, your jokes, they supplement other people's jokes. His jokes come out of the blue. Design Knob, guys, stop taking this personally. You're all valued members of the community. Oh boy, now everybody needs a title. Are you asking us how Donkey's trading is? Well, the trades he shares with us have a pretty high win rate. Jitten, of course, brother. You two provide value. Alexander, should I go short? Please advise. No, I wouldn't go short here. I never go short below the POC on a rotational day. What I'm waiting for here is the market to make good support so that I can go long for push back up. I would consider going short if the market can't find any support up in here. So like if it starts to get below the overnight low, then maybe I'd consider shorting as a continuation of a new trend down. But otherwise, this is just rotation. So any push down should find support and rotate right back up. So again, I'm thinking this halfback right here and this node of volume below could act as support. And that to me is a buy, not a sell to sell down to it, but a wait for it to get down there and buy for the rotation back up. All right, J period making another weak reference right on the exact same level as that D low. Ticks are finally starting to break below the zero line. So this will give us the pullback that the larger buyers need in order to start participating. Breakout. Oh, Donkey, you don't know what they're saying? Well, now you're never going to know who was. Who's questioning you? They're just one of the chumps. So you're going to let that roll off your back. Yeah, Jitten, it's funny. I would say that that 20 is less probable to act as support now because we didn't get a pullback. It would have been great support on a pullback if the market could have pulled back to it. But now we're pushing through it to get the pullback. Does that make sense? It's like you got to understand what the pullback is. The pullback is a chance for buyers to step in. That would have been a great spot to step in, but first they need the pullback to happen. They're not going to step in now up here. They're waiting for a better entry price. So like I said, first potential spot is halfback on both indices. Let's wait and see how the market reacts to that. Okay, 44.04. No, PTC research. What he's saying is he blocked you can individually block which people's comments you see, and he just blocked your comments. So he didn't know you were talking about him until he heard me bring it up. All right, small bounce off the halfback here, but nothing too impressive. Might end up being a gap fill afternoon. That seems very unlikely to me here. The advancers versus decliners staying pegged up here at higher prices all day is a sign that they want to buy the dips. So any pullback should get bought up. Can't tell you ahead of time how far it'll need to pull back, but I doubt all the way into the gap. Oh, you think he's talking about the gap above us? Yeah, we could fill that for sure. I must say there's something particularly annoying about days like today where when the market makes a move, it makes it instantaneously in a matter of seconds, and then it just comes to a halt and just grinds. I mean, it is what it is. Who cares? But it's very annoying. So, okay, Charles, what are you asking yourself now? Is that halfback going to hold? Are we bringing in enough buyers here? Well, I see that we've started to turn some candles pink in here. So I look back at the ticks to see, is it more buyers than sellers? And it's actually hard to, to figure out because on that pullback, the tick pulled its way all the way down to almost negative 1,000. And so now it's pushed its way all the way back up. So it would have taken buyers stepping in to do that, but there still isn't enough to get us above the zero line. So probably we need one more little pullback here to really bring in those strong hands. And Miles, I guess I just answered your question. Sellers piling on with pink. That's what's hard to say. It's just not quite clear. There are more sellers than buyers, but the buyers had to push their way all the way up from negative 1,000. So they definitely did step in there. But they just haven't won quite yet. Eloquent as always, Nav. J, wow. Just wow. Nothing more to it. Just blown away. Wow, bro. Miles, tick struggling. Yep, they bounced off that zero line. But of course, the timing of it, the tempo of it, this very slow tempo, this is not bearish, right? This is not what panic feels like. Alpha Trader Charles, do you use Market Profile to trade Bitcoin? I have not. I've looked at it before and looked for a pattern, a way to read Bitcoin on the profile, and I never quite found any like particular edge to it. But I didn't spend enough time. I didn't like look at it on a daily basis. But of course, Market Profile can be used for any financial asset. All it is showing you is the same information you see on the regular candlesticks, just in 3 dimensions. But as far as things like weak references and, how much time does the market spend above or below the value area? Does the value area create trends over a day-to-day basis? All those type of things, I never really cracked the code with the Bitcoin. Just didn't spend enough time watching it. Thank you so much to the 107 of you that are sitting here watching. If you're confused about what you're seeing because you're new and you're like, am I looking at the matrix right now? What is happening? Feel free to ask questions. I'd be happy to go into detail for the people who are confused. Just let me know. Ocean Blue, isn't this the pullback you mentioned? You wanted to see the power up, i.e. healthy? Yes, it is. This is the bulls' chance to step in here, the longer term players. And it's tough to say if they are. There are buyers stepping in here, but there's still more sellers. So we might need one more pullback, maybe down here into this node around 4401. And then the buyers step in. But I certainly don't feel any fear or panic in this, like the market needs to continue selling off massively. It's just the bigger boys layering in their bids, slowly getting chewed up. Johnny, I'm new here and I have no idea what the left side of the screen says. Yeah. Okay, so this is what's called market profile software. It's basically the same thing as candlesticks. It just puts it in 3 dimensions. So it lets you see both the amount of time the market spends at a certain level based on how many of these letters there are, and then how much volume trades at each level based on the amount of volume over here on the left part. So what you see here is 2 profiles. These are identical, 2 profiles next to each other. And the reason I do that is so that I can see what it looks like when it's condensed on top of itself and what it looks like when it's expanded out, so I can see each 30-minute period. So let me just collapse the second one so you can see what I'm talking about. Okay, so you see these are identical. It's just 2 of the same profiles right next to each other. And I have that second one stretched out. Boop, boop, boop. So that I can see how the market moves through each 30 minutes. So this blue box that you see up here, this is what we call the value area. That's where 70% of the day's trade took place. The green and yellow letters that you see running across here, that is the point of control. So that is where the most time has been spent in today's market. And then over here, the red candles are where the most volume traded, the top 30%. The pink ones are the middle 40%, and the white ones are the lowest 30% of volume for the day. Okay, so that halfback failed. Now we're looking to the next support, which is this node of volume right around here. If this node breaks, if we get back down below 44.40, I would be looking to exit my long for the rotation back to the POC, just because this A period has such a massive range. If we need to pull back down lower into here, I don't want to be stuck in a long trade. So I would re-enter on the way back up. But the market should find support in here if it's going to. Are there any resources to learn about the market profile? Yeah, you could check out Jim Dalton's classes at jimdaltontrading.com. Also, Shadow Trader YouTube channel talks about it quite a bit in his weekly breakdowns. Ocean Blue, that's a great point. Each one of these letters represents a 30-minute time period. So like a 30-minute candle. All right, well, they keep pushing it lower. So like I said, below 4,400, I'm not interested in going long unless I'm catching it on the way back up. Because if that 4,400 number can't hold here, we may need to pull back down lower into the overnight range. So I don't have a good sense of support once we get down below that level. So I would exit a long trade and then wait to re-enter on the way back up. Charles, why not just short it? If you're getting nervous that it needs a bigger pullback, why not just go short? Well, because of the fact that the value area is up here, the POC is up here, that tells me that we are below the POC and below value. So the market is worth more than it's currently bidding at. So I want to be a buyer, not a seller below that level. So better to wait for a further pullback and then get in for the rotation back up rather than try to guess how far it's going to go down and short it. As the slow-mo market continues. Jonathan, but at what point do you say it's enough of a pullback? When those ticks start to trend back above the zero line, right? So as long as these ticks that you see right here are below this blue line, it means that there's more people selling than buying at these levels. Okay? So you can enter a long trade right now. You could say, I'm below the POC. I'm below the value area. It's a rotational day. I want to enter long right here. How much am I willing to risk? If you're going to put your stop right here, then you're risking this much to potentially make this much, right? So that's like a 4-to-1 risk reward, or 1-to-4 risk reward. So that's a very good trade. So I'd be happy to get in that trade right now before the low has been confirmed. And if I'm wrong, okay, I just lose this much here to here, right? But if I don't have enough confidence to get into the trade right here, I could just keep watching those ticks for when they get back above the zero line. When they're able to work their way back up and then they're back above the zero line, well, now I know the bulls are in charge. So maybe the price is up here at that point. So I go long just for this small little trade. But I can go long with larger size because I waited and I have confidence that it's going to go long. So all just depends on how you look at the markets. All right, well, that just stopped me out of my long trade. So now I'm looking for the market to keep pulling back, looking for support. Again, don't think this is going to cause some massive panic sell-off here, but it just wasn't enough to bring in enough buyers. So next potential support will be this node of volume from the overnight here around 94. Doesn't necessarily seem like that's going to hold, but it is there, worth keeping an eye on. Okay, there is some volume from the overnight back on the 27th there, so maybe you get some support. But more than likely, it needs to pull back down into the lower end of the range, around the opening price, maybe even into the gap. Tough to say. If it was liquidating, I would expect a much bigger pullback, but this slow grind, they could find support anywhere in here. So I'll call it when I see it. Otherwise, assume that the selling will continue. Buyers haven't won yet. Yeah, that stop was set from the beginning. Malcolm, the selling will continue until morale improves. Yeah, pretty much. Well, it just sells until it's such a cheap price that people can't resist but buying it. Oh my God, it's on sale. I have to have it. So when do they start getting excited again? When do they start licking their chops, saying I gotta have my ES contracts at this level? We'll see it when it happens in the ticks. The buyers will start taking over and pushing them back above the zero line. Thank you, PTC Research. I appreciate it. Tell your friends. TP, for your learning, where did I go long and where was my stop? I went long at Halfback, and I went long way up here. So while the market was still grinding around up here, I went ahead and put in a little 2-contract order right there on the Halfback, assuming, because we had a bunch of weak references. We had like 2 or 3 weak references here. And then I forget where the last one was, but there was another weak reference in here somewhere. And so I thought it was very high probability we needed to repair them, and that Halfback would act as support, because also at that time, the 20-moving average was still working its way up to price, and it was about parallel with that. So I put in my order there, and I put in my stop at like 4,475, so like right here. And that was just because the bottom of the last node below there. So I thought if this node doesn't hold, the market needs a bigger pullback to bring in the buyers. So I put my stop there. And then I just sat here in frustration for like 30 minutes watching it grind around going, come on, just rotate back up. And then boop, it stopped me out. So I'm still looking to get back into the same trade. I still believe the market is going to rotate back up to the POC. I'm just waiting until I've got confirmation that the low is in before I enter again. So I'll need to see these ticks start to work their way back above the 0 line, which it looks like they're on their way to do right now. And then I'll know that it's pulled back as much as it needs. And so I can literally jump into the same trade from here to here or anywhere in here where I decide to get in, heading back up to there. Auto Detail Lab, what is your typical target range in points? I don't really do it that way. I don't have any specific targets based on a specific number of points or a certain percentage. It's always based on where I think the market is most probable to go. So, for example, right now, I think the highest probability, once the market finds support, it's still looking for support. But once it finds it, the highest probability place for it to go is to the POC. So the target will be from wherever I enter to the POC, and it doesn't matter. If I enter here, it's the same target if I enter here. That's the place the market is most likely to go, so that's the target. And I measure risk the other way. I go in reverse with risk. So if I'm going to enter here, I ask myself, where would I put my stop? Let's just say my stop is right here. Well, then I'm risking this much to potentially make this much. Is that a trade I'm willing to get into? Yes, it is. But up here, if I was going to enter at this level, but I still had to have my stop down here, well, then I'd be risking this much to make this much, which to me is not a good trade. Jay Trader, that's brother, that's what I've just been talking about. So I did buy below the POC here at the halfback, but I put my stop below this node of volume, and I will buy it again, but on the way back up. Once I know the low is in, I see that the buyers have taken charge and they've gotten the ticks back above the zero line. I will still get into the long trade up to the POC. I'm just not going to randomly get in right now when I don't know where the low will be found. Okay? I took some risk. I got stopped out. Now I'm waiting for a better opportunity to re-enter the same trade. Next support, 43.89. It's really tough to say, man. This area here where the market is currently trading, this is the next support around 94. After that, it could be the opening price, which is at 88, but not likely. After that, they're going to start trading into the gap. As soon as they start getting into the gap, more sellers will pile on, and then you'll get continuation lower. So you may need to get into this node around 75 to 78-ish for support. But as I've been saying this whole time, you can find support anywhere in here. So you don't have to trade all the way down to here. Right now, it's more about the ticks. It's more about where do the buyers step in. And look at that. First sign they're stepping in. We're back above the zero line. Did you sell at the halfback? Because then maybe you are. Man, it looks like I got back literally just in the nick of time as the market is beginning to push its way back up into the value area. Okay, so as I mentioned, on a rotational day, when the market has a pullback and it gets below the POC and below the value area, you look for support to buy. Okay, now obviously this support down here was very difficult. I was talking about it at the time. It's hard to buy this because you don't know how much further down it's going to go. But now we can see a break in that downtrend. The ticks are trending higher and they're above the zero line. We've also seen the reversal in the other two internals, which were trending down and are now starting to reverse. So we can make the assumption that this is the low, this was the support. So now I look to enter long with my target up here at the POC. Okay. And I just play it the way I always will. Where's my entry price? Where do I want to get long right now? Do I want to wait and see if it pulls back down to here? Where do I want to get long? And then if I'm going to get long there, where do I put my stop? So how much am I risking? And then I choose my position size based on that. Knife, where's the POC on the NQ? It's sitting at 14,973, maybe 972. And Abduo, can I explain internal, please? Yep. Basically, these screens that you see right here, the Thinkorswim platform, these are what I call my market internals. Okay. The top left and the top middle, that is the breadth and the advancers versus decliners. And then the bottom left and bottom middle are the ticks for the NYSE and the ticks for the Nasdaq. All four of them are basically showing me buyers versus sellers. Is there more volume in the selling side? And is there more actual buying or selling happening on the indices themselves? Okay. So I look for trends. I look for the direction that they're moving. And if they're above or below the zero line. And then these two screens over here on the right, the SPX and the NDX, I just use for that moving average, the 20 simple moving average on the 15-minute candles. And I use that as support or resistance. Belarus, I'm just so confused. I'm going to have to treat you like you're two different people. There's no way I can keep up with which account is which. So you'll be Alexander when you're Alexander, and you'll be my friend from Belarus when you're whatever this says. Jitten, sure would be nice to repair those weak references above. Yeah, give it time, brother. The market is rotational. It rotates up. That's part of what it do. When are you getting in? If you're talking about getting into a long trade, I already have. I told you what I needed to see to get me into a long trade. I needed to see us put in a good low and the buyers to take over. I saw that in the ticks. So as soon as I see what I need to see, I enter a trade without hesitation or reservation. If I see something that tells me I'm wrong, I'll exit that trade in the exact same way. This one time, Tom, I'll tell you, but I don't want to make a habit of it because as I've talked about on this channel before, I don't like you guys knowing what my trades are because then I start to panic more. It like piles onto the emotional distress of it. But yeah, I got in at 44.02. 44.02.25. Noto Cactus, thank you for the $10, brother. I appreciate you. Yeah, Cotton Dog, we've talked about that in the past. I would be up for it. I just haven't got around to doing that. No, Cactus, you're a lady. I'm so sorry. Thank you for the $10, my dear. Appreciate you. To be fair, Cotton Dog, I do talk about those things all day, every day, as they're happening in real time. I promise you, there's no information that I hold back when I do these live streams. I am telling you every thought that goes through my head, oftentimes repeating the same thing 10 times in a row. Like, I tell you before I get into every position. I just don't literally say, okay, I'm going long at this exact number with my stop at this. But I'll say 20 times before the market gets there, if the market finds support here, I'll go long here. Like, I'll say it so many times. It's just people really feel like they need to hear the exact entry and exit, which is where I run into trouble. So, but I promise you, I'm not holding anything back. There's no information that's not being shared here. My thoughts on exactly what's happening in the market, I share them like completely in every moment. All right, the M period is upon us. Start getting your guesses into the chat. Where do you think the market's going to close in a half an hour? Are we going to push back up to the POC? Going to push back up into value? Or do we need to have another pullback lower here at the end of the day? My guess still remains the POC at 44.13. But what do you guys think? Hit me in the chat. Yeah, Cotton Dog, if you're looking for a more formalized thing, I recommend Jim Dalton's courses. He's got the regular teaching structure where you can just watch the course and then, you don't have to listen to him talk all day. Malcolm seeing 44.20, so a push higher towards the highs of the day. Nicholas 44.25, another person seeing for a push higher. What do you guys think? Where are we going to close today? Oh, you're seeing the fill of that gap. That would take quite a spike. But it's not impossible for the Murderbot. Patrick is seeing 44.10. So a small push up into value here. Okay, well, thanks for the heads up about the MOC, but the question is, where do you think the market's going to close? What price level? J Trader, 43.90. Okay, looking for a pullback down there towards the entry, the opening price. FRM, 44.10. Another person seeing a small push higher into value. Brett, welcome, Brett. 43.70. So another person seeing a pullback, but down below the opening price. Trying to backfill a chunk of that gap. Yeah, 43.70 is pretty far down there. I suspect we'd find support in here around 77 before we'd get down to there. But it's possible. Never say never to the Murderbot. Design Knob, another person looking for a pullback to 85. Justin seeing a push up to 44.21. So right back up to the high of the day. TV seeing 43.86. So another person seeing us down by that opening price. RK Leon is seeing 44.17. Repair that weak eye period high. Fred is seeing 44.12. Okay, right around that POC. You're with me. Sanju, 44.09. So sees us just kind of getting a small push higher. Scrapper, 43.91. Again, pull back down. Yeah, we're about 50-50 today. Half think we're going up, half think we're going down. Should make for an interesting M period. Jitten seeing 14.25. Again, right up there around that POC. Donkey sees 4,400, right where we're floating around right now. Keishen is seeing 44.06, so small push higher. Cotton Jog, Charles, I thought Dalton doesn't discuss trade entries or... Yeah, Cotton Dog, I think maybe another way to explain this would be like, I can't teach you the way I take trades because I don't think that will help you. I think if I made a course that just taught how Charles enters and how Charles exits, the only person who will make money off of that is somebody who happens to be just like me. So maybe at best 5%, 10% of the people that pay me the money for that course will make money out of it. Most of the people who try to trade like Charles trades will lose money because they are not Charles. Charles has his own psychology. He has his own experience, his own perspective on the market. So the way he chooses to enter and exit trades is set up for him, not for other people. I believe that you, Cotton Dog, have a different risk-reward profile than I do. I think you have different experience. I think you see the market differently than I do. So I would want to teach you how to take trades based on your psychology, based on the way you see the world and you function best in it. Right? So that's why I don't teach setups like that. I teach how to read the market and how to learn to develop your own strategy based on what you see in the market. A great example is what we've talked about over and over again when it comes to rotational days. I see a rotational day like this as a reversion to the mean trade. I'm going short above, I'm going long below, and I'm heading back towards the mean. That trading system pays me money over and over and over again every rotational day. But trading Donkey, whom I have nothing but love and respect for, he looks for trends within the day. So he's looking at this and saying, oh, this is trending lower, and he's shorting each of the highs for a trend down. And he's making money. So we're both looking at the same market. We're seeing the same things, but we're literally taking exactly the opposite trades of each other, and yet we're both making money. That's what I'm trying to explain to you is every person has their own way of trading, and what I teach is how you discover your own way, and you trade for what works for you. I'm not trying to teach you how to take entries the way I do. So I hope that clears it up for you. And I'm not attacking you. It's just I have to have a clear answer for that because people ask me it every day. Okay, so PTC Research is saying 43.85, seeing a small pullback. Casey seeing 93. Patrick, never say never to the Murderbot. It's true, man. It's true. It's a true story. Arthur seeing 44.10. Trading Donkey, I'm literally short to trading the one time framing. Yeah, Cotton Dog, I hear you that you're just curious, but most people are just looking to copy. When most people ask me where I get in, where I get out, it's because they want to get in, get out that way. If you're just looking to learn, don't learn where I get in and get out. Learn how I look at the market, how I anticipate what's going to happen. That will be valuable. Aaron, 4,400 on the, or 4,450. So basically right about where we currently are. Yeah, PTC Research, that is what I have found myself as well. All right, well, now it's starting to look like a pullback here in the M period. Can't keep those ticks above the zero line. So first support, we'll assume, same as it was in the L and K period, right around here where this node of volume is. If not, we're probably looking to get back down into that gap. Am I here every day? I'm here every day for the first hour of trade. But normally I just do the rest of the day on a private stream for members of the Brigade. It only costs $10 a month. You can see there's a link in the description on the YouTube video. Basically, you sign up, you pay $10, and then you get to hang out with me every day. I think it's fair to say that within a month, I'll give you $10 worth of good advice. All right, 6 minutes early. today. The volatility. David, yeah, it's a tricky question. How long it took me to learn the insights I have. Um, if I had to give you a number, I'd say like 6 months. Like I took over a period of about 4 months. I took 3 different courses with Jim Dalton and was trading with the profile in between. And then it was probably about a couple of months after I took my last course where I finally felt like it had kind of all clicked and it was working out for me. But that being said, I still have new insights every day. It's not like I've learned all there is to learn and now I just talk about it. I'm every single day. And that's one great thing about doing the live streaming is it forces me to really think my way through everything I say all day long, and constantly be questioning, can I make this better? Is there something I'm missing? So on and so forth. So I hate to be the bearer of bad news, but I am still learning as well. The process never ends. Well, the devil came down to LA looking for a deal, looking for a soul to steal. Donkey buying here. But why? Just hoping for that M period, that Murderbot spike. To me, it's 50-50. They could head straight down into that gap. You just realize how stupid bears are. I don't know. They're pretty good at catching salmon. You ever seen those videos? They just stand there and the salmon jump right in their mouth. Pretty smart. Jay, I never really studied Stoudemire. I have one of his books, but I just kind of glanced through it. Jim Dalton's been my go-to. Maybe a poor low and a rip back up. I sure hope not. Andy, do I practice risk management? Absolutely. 100% always. The size of my position is based on how many points between my entry and my stop. All right, cue the Murderbot. Murderbot, Murderbot, whose face are you gonna melt? Murderbot. So for those of you that don't know, there's a algorithm that sets in about 10 minutes and then about 5 minutes before the market closes. That generally causes some volatility, and to my mind is completely random. We call that the Murderbot. All right, the first murder pushes to the downside. Are they going to take us into that gap? Donkey, it's Goldman Sachs. No, the one at 346 is Goldman Sachs. This one's Merrill Lynch. Honestly, it's not bad for Murderbot. I'm surprised to see that the Murderbot pulling down like this isn't causing more like panic selling. All right, here's the second round of Murderbots. I mean, they are holding the price up above the gap. You know, they're staying above the open. Design knob, absolutely horrific. You mean you're trading this week? I wouldn't feel bad about that. This has been a tricky week to read. The market's been behaving very weird. It's a good time to learn. Okay, is that a poor low? No, it's still good. Oop, there's the poor low. All right, so poor low often causes a push away, but then the market almost always comes back to repair it at some point. So this would be considered the push away from the poor low, not bulls stepping in. Cotton Dog, I don't have a good answer for you on that. I'm sure there are programs that do both, right? I'm sure there are long-term investors who've developed programs that are designed for that, and a lot of them are developed for short-term trading. And there's a lot that are developed for scalping, for just getting a couple of ticks of profit here and there. And I'd be willing to bet all those types are at work in the market right now. All of them competing with each other. Oh, man. So the market closes leaving a poor low behind. Dun, 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 dun. All right. Well, let's see what the overnight has to do with it. Are they going to pull us back down into the gap? Or are we going to open inside today's range or above it come tomorrow? Opening inside today's range or above it would bring that poor low into play. It is now in need of repair. But let's find out tomorrow morning. Thank you guys so much. I appreciate you. I appreciate the 125 likes. Noto Cactus, I appreciate the $10. And I will see you all here tomorrow morning. Thanks a lot. Bye-bye.